The world is watching as the conflict in Ukraine rages on. But what if the most decisive battle isn't being fought with tanks or missiles? What if it's being fought in the world of finance, in the shadows of global markets? The United States has just made a move that could cripple Russia's ability to fund its war machine. And they did it without firing a single shot. This isn't just another round of sanctions. It's a strategic strike aimed directly at the heart of Russia's financial system. A move so significant it could change the entire course of the war. Stick with me, because we're about to break down exactly what happened, how it works, and why this could be the economic checkmate the world has been waiting for. To understand the gravity of this, we need to talk about one key institution, the Moscow Exchange, or MOEX. Think of it as the New York Stock Exchange of Russia. It's where stocks, bonds, commodities, and, most importantly, currencies are traded. For years, the US dollar and the euro have been the lifeblood of this exchange. They were the benchmark currencies, the primary means for Russian companies to do business with the rest of the world, and a crucial tool for the Russian government to manage its economy and stabilize its currency. The ruble? All of that just came to a screeching halt. On June 12th, a significant day in Russia known as Russia Day, the U.S. Treasury Department dropped a bombshell. They sanctioned the Moscow Exchange itself, along with its central clearing agent, the National Clearing Center. What does this mean in plain English? It means that any bank or financial institution that continues to deal with the Moscow Exchange in U.S. dollars or euros could face severe penalties from the United States. In essence, the U.S. has made trading dollars and euros on Russia's main exchange radioactive. The immediate effect was chaos. The very next day, the Moscow Exchange announced it was suspending all trading in dollars and euros. Now, you might be thinking, so what? Can't they just trade somewhere else? And that's the core of the issue. For decades, the entire financial infrastructure of Russia was built around this centralized, transparent system. When you wanted to know the real value of the ruble, you looked at the exchange rate on MOEX. It was the official, market-driven price. With that gone, Russia is now flying blind. They've been forced to revert to a less transparent, over-the-counter market. This is like going from a brightly lit, regulated supermarket to a network of back-alley deals. In this new system, banks trade currencies directly with each other. The problem is, it's opaque, it's less efficient, and it creates a huge amount of uncertainty. The Russian central bank is now trying to establish an official exchange rate based on reports from these over-the-counter trades. But how reliable is that? The price can be more easily manipulated, and there's no single trusted source of truth. This creates a massive headache for importers and exporters. Imagine you're a Russian company trying to buy goods from China. You need to pay in yuan, but first, you need to convert your rubles. What's the fair price? Before, you'd look at the Moscow Exchange. Now, you have to shop around, and you might get wildly different rates from different banks. This adds costs, risks, and delays to every single international transaction. It throws sand in the gears of the entire Russian economy. This financial chaos directly impacts Russia's ability to wage war. The war in Ukraine is incredibly expensive. Russia needs to import critical components for its weapons, from microchips to machine tools. Many of these components are sourced from countries that still trade with Russia, but the transactions often happen in dollars or euros. Even when trading in friendly currencies like the Chinese yuan, the dollar often serves as an intermediary currency for calculating exchange rates. By disrupting the dollar and euro markets, the U.S. has made it significantly harder and more expensive for Russia to acquire the high-tech parts it needs to build more missiles, drones, and tanks. Every transaction becomes a complex, costly puzzle. Furthermore, this move strikes at the confidence of the Russian people and its businesses. When you see your country's main stock exchange barred from trading the world's most important currencies, it sends a powerful signal. It tells you that your economy is being isolated, that your currency is becoming less convertible and less valuable on the world stage. We saw this play out immediately. On the day of the announcement, Photos circulated showing long lines at currency exchanges in Moscow and St. Petersburg as ordinary Russians rushed to buy up physical dollars, fearing the ruble would collapse. While the central bank has so far managed to prevent a full-blown panic, the underlying fear and uncertainty are very real. This isn't the first time the U.S. has used financial sanctions as a weapon of war. But the targeting of a country's primary stock exchange is a major escalation. It's a move that goes beyond sanctioning individuals or specific companies and strikes at the very architecture of the nation's financial system. The goal is clear: to make it so difficult and so costly for Russia to conduct international business that its ability to fund its military ambitions is severely degraded. It's a long-term strategy of economic attrition. You're not just trying to win a single battle, you're trying to cut off the enemy's entire supply line. So, what happens next? Russia will desperately try to adapt. They are pushing hard to conduct more trade in their own currency, the ruble, and in the currencies of so-called friendly nations like China's yuan. In fact, the yuan had already overtaken the dollar as the most traded currency on the Moscow exchange even before these new sanctions. This crisis will only accelerate Russia's pivot towards a yuan-centric financial system. However, this is not a perfect solution for Moscow. The yuan is not as freely convertible as the dollar, and it exposes Russia to the whims and economic policies of Beijing. It's trading one form of dependency for another. The secondary sanctions are the real teeth of this policy. The U.S. isn't just telling American banks not to deal with the Moscow exchange. It's telling banks all over the world, in China, in Turkey, in the United Arab Emirates, that if they facilitate these dollar and euro transactions for Russia, they risk being cut off from the U.S. financial system themselves. For a global bank, losing access to the dollar is a death sentence. This forces banks in neutral or even friendly countries to make a choice: do business with Russia or do business with the rest of the world. More often than not, they will choose the latter. This is the brilliant and brutal effectiveness of America's control over the global financial system. The U.S. dollar is the world's reserve currency. It underpins global trade, and the U.S. has the power to decide who gets to use its plumbing. By sanctioning the Moscow exchange, the U.S. has essentially thrown a wrench into Russia's financial plumbing, causing leaks and blockages everywhere. It's a slow, grinding process, but the effects are cumulative. Every day it gets a little harder, a little more expensive for Russia to import what it needs and export what it sells. The ultimate question is, will this be enough to stop the war? Economic pressure alone rarely forces a major power to completely change its strategic course overnight. However, it can severely limit its options and capabilities. By starving the Russian war machine of the financial oxygen it needs to breathe, the United States and its allies hope to force Moscow to the negotiating table from a position of weakness. This latest move is arguably the most significant financial blow landed on Russia since the start of the full-scale invasion. It's a high-stakes chess match being played on a global scale, and the U.S. just took a very important piece off the board. It's a powerful reminder that in modern warfare, the most powerful weapons aren't always the ones that explode. Thank you so much for watching. This is a complex and rapidly evolving story, so if you found this breakdown helpful, please hit that like button and subscribe for more deep dives into the events shaping our world. Let me know your thoughts in the comments below. Do you think these sanctions will work? Stay informed and stay safe.